Dear learners, I would like to welcome you all to this lecture on evolution of international monetary system and the role of special drawing rights. So this lecture is basically a part of our MOOC course on international economics, and this lecture is included as a unit 4 of our module 11 of the MOOC course on international economics. Now, let me introduce how international monetary system has evolved over the years. The international monetary system has evolved over the last, you can say 75 years or more than that, to adapt to changing global conditions. So that is why it keeps on changing. It incorporates lots of modification. But despite modification, its core purpose has remained the same, that is to ensure financial stability and facilitate international trade. Now, when we are talking about international monetary system and its evolution over the years, we have to start with classical gold standard, which was prevailed in international trade from 1816 to 1914. Now, this is considered to be the first phase of the international monetary system. And since this is the first phase, it is very obvious that it is initially adopted by a few countries, and later it was accepted globally. Now, classical gold standard, which was introduced in 1816, it introduced a fixed exchange rate regime with gold coins and bullions as a standard. Since the introduction of classical gold standard, it helps to boost international trade over the globe, and it enforces some kind of strict monetary policies to the participating countries. That means those countries which engage in international trade, they have to adopt some kind of strict monetary policy. There are some merits of gold standard. That is why international gold standard was adopted in 1916. The first one is that gold was widely accepted. You can say most of the countries it is accepted as a medium of exchange. So as a result, what happened? Since gold was accepted as a medium of exchange, and international gold standard, it ensures fixed exchange rate. So that is why fixed exchange rate, it facilitates global trade across the world because of less amount of uncertainty. Now, since acceptability and exchange rate stability is considered to be merits of gold standard, another important merits of gold standard is the automatic adjustment. So if there is some kind of trade imbalances, there is a inbuilt mechanism in the gold standard which helps to correct the imbalances naturally. So since it helps to correct or restore imbalances, that is why another important advantage of gold standard is considered as a price stability is considered as another important advantage of gold standard, because prices remain stable as they were tied to gold reserve. So along these advantages, another important advantage of gold standard is that it helps to increase or enhance public confidence, because public has always faith in currency backed by gold. Although it has certain merits, and that is why it is accepted globally across the globe by most of the countries, but it has certain demerits. Because the first demerits of gold standard which can be considered is the limited monetary policy, because gold standard has no flexibility to address internal monetary issues. So that is why it helps to maintain some kind of external balance, but since this system has no flexibility, so that is why no flexibility to address issues related to monetary policy. So that is why limited monetary policy is considered to be one of the demerits of gold standard. Now, another important demerits of gold standard is that there is always a risk of inflation as well as deflation. So countries could face unwanted inflation and deflation because it has no internal flexibility. Another important demerits of gold standard is the deflationary pressures. So what happened? Gold losing countries, they contracted their, what they usually do, they contracted their currency, and while gold receiving countries, they did not necessarily expand their gold. So that is why what happened? At the one hand, gold losing countries contracted their currency, but gold receiving countries may not necessarily expand their currency, which ultimately create some kind of deflationary pressures, overall deflationary pressures in a economy. Another important demerits of gold standard is the lack of economic stability. Why it is happening? But what it was happened? Because it prioritized exchange rate stability over internal economic stability, which ultimately lead to economic instability of the participating countries. And gold, the system of gold standard is also criticized on the ground that it completely failed to deal the situation during crisis. So that is why this system collapsed during war and economic downturn. So that is why if you see why collapse of gold standard occurred, this is because the World War II led countries to print more money than their gold reserve. So as a result, what happened? Since countries were printing more money considering the war expenditure, it resulted in excess money circulation, causing the system to collapse. So ultimately what happened? Only the United States continued with the gold standard for a period. Now, after the collapse of gold standard, another system occurred which is known as Bretton Woods system. It was introduced, or it was happened in 1944. So if you see the period of Bretton Woods system in international monetary system, we have to consider the period from 1994 to 1971. So it was established in the post World War II to avoid the rigidity of the gold standard and to prevent trade disruption. As a result of establishing of Bretton Woods system, it also helps to create some kind of agencies which can bring all the countries together for a favorable trade environment. So as a result, after the Bretton Woods system, there's a creation of International Monetary Fund, which introduced a adjustable peg system. So what happened? Countries pegged their currency to the US dollar, which was convertible to gold at rupees 35 per ounce. So this is a standard rate. So this ultimately happened, it allowed control exchange rate fluctuation within a 1% range, 1% increase or 1% decrease. So exchange rate should fluctuate within the range of 1%. So that it can give some kind of stability, it can give some kind of confidence to the countries. Now, what IMF did? What is the purpose of getting IMF? IMF provided financial assistance to countries facing balance of payment deficit from time to time under the Bretton Woods system. Now, which lead to breakdown of the Bretton Woods system? The first cause of breakdown of Bretton Woods system is a built-in instability. The system is some kind of inbuilt in which create instability in the system. This is because And then the fixed exchange rate system lead to imbalances, and it also create some kind of deflationary pressures in the to the countries or among the countries which engage in international trade. Another important cause, which is which is in literature, which is known as Triffin dilemma, also lead to breakdown of Bretton Woods system. What Triffin dilemma is all about? Triffin dilemma is demand for US dollar exceeded its supply, so which ultimately result weakening of US gold reserve, because there is a huge demand for US dollar, which is quite high as compared to supply of US dollar. So which ultimately results deteriorating in the US gold reserve. Another important cause or factors which lead to breakdown of Bretton Woods system is the lack of international liquidity. So increased demand for dollar, because dollar is a common currency, led to US to print more money, decreasing its value in the international market. Another important cause which is available in literature, which is considered to be one of the important cause of breakdown of Bretton Woods system, is the US policy mistake. So high government spending. So what US government spending on the Vietnam War and space program led to further deficit. So another important cause of breakdown of Bretton Woods system is the speculative attack. So what happened? Countries involved in some speculative activities for benefit, to get some benefit from international trade. So as a result of those speculative activities, as a result of delayed devaluation, it encourages currency speculation and worsening the economic instability of the globe. Another important cause which can be cited as a cause for breakdown of international monetary system is a crisis of confidence. So there's some rumor that the rumor was that dollar will devaluate. So rumors of dollar devaluation in 1970, it just occurred in the year 1971, and that lead to massive capital outflows, which ultimately lead to a breakdown of Bretton Woods system. So that is why final collapse is occurred in 1971. The US suspended dollar gold conversion, and most countries abandoned fixed exchange rate. Now, if you see the present international system, that is after breakdown of Bretton Woods system, that is post 1976, there is no formal international monetary system. So the present international monetary system operates under a managed float system introduced in the Jamaica Agreement in 1976. So now the exchange rates are determined by market forces with occasional government intervention. If there is a need of any kind of government intervention, then government will intervene. Otherwise, exchange rates are determined by market forces, that is demand for a particular currency and supply of a particular currency. And it is basically managed by the G20 countries, evolving from the initial G5 in 1980s. Now, since the current monetary system has continued from 1976 after the breakdown of the Bretton Woods system, so obviously it must have some kind of advantages. So what are the advantages we should discuss? The first advantage is the financial stability. So it helps to maintain global price stability and economic growth. So that is why financial stability, it is basically all the countries who involve in international trade, they need some kind of stability. And the current monetary system has that advantage, or that system of giving some kind of financial stability to the countries which engage in international trade. So that is why it is considered to be one of the important advantages of the current monetary system. So efficient money mobilization is another important advantage of current monetary system, because current monetary system facilitate international transaction and exchange rate determination. BOP management, that is balance of payment management, is also considered as one of the important advantages of the current system, because current monetary system encourages nations to manage trade deficit effectively. If there is some kind of deficit in trade, there is some flexibility, because we are not in the fixed exchange rate as in which was a normal case in case of Bretton Woods and the gold standard. Now we have some kind of flexible system. So that is why a balance of payment can be managed by the countries engaging in international trade. So that is why it encourages nations to manage trade deficit effectively. Another important advantages of current monetary system is it helps to regulate trading, because it ensures smooth international trade processes as compared to the earlier system. So that is why there is an increase in the volume of international trade due to the flexibility in the current monetary system. And as there is an increase in trade, obviously another important advantage of the current monetary system is that it helps or it encourages investment. Because how it encourages investment? Because it supports cross-border capital flows from one countries to another countries, having less amount of restriction as compared to earlier system. Another important advantage of current monetary system, which increases its popularity, is the liquidity provision, because it helps countries to access necessary financial resources under this system. And crisis management is also considered to be one of the important advantages of the current system, because this system attempts to prevent economic disruption. Now, in spite of having so many advantages of current monetary system as compared to the previous system, it has some amount of shortcomings also. So what are the shortcomings of the current system? One of the important shortcomings of the current system is the instability, inability to prevent financial crisis. Although flexibility is incorporated in this system, it has some advantages, but still it is not fully enabled to prevent financial crisis. Because after the adoption of this present financial system, that is the flexible exchange rate, some of the major crises also occurred. For example, the crisis in Mexico during the period of 1994 and 1995, where IMF have to intervene. The volume of import is much higher as compared to the value of the export, and as a result, Mexico is in a huge trade balance of payment disequilibrium, that is trade deficit. So similarly, you can give the examples of Southeast Asia, where balance of payment deficit occurs in the year of 1997. We can also give the example of Russia in 1908, where disequilibrium occurs. Brazil in 1919, and we can also give the example of global financial crisis, which impacted almost all the countries during the period 2007 to 2009. So these are some of the financial crises where the current financial system was unable. They don't have the ability, or they are not able to control those crises, or they are not able to restrict those crises. So that is why inability to prevent financial crisis is considered to be one of the important shortcomings of the current system. Another important shortcomings which we can cite is the exchange rate misalignment. So managed floats sometimes fails due to external or internal factors. Now, since we have discussed, that there are certain advantages of current system. Now, along with disadvantages of current system, now we will going to discuss the next issue of our lecture. This is special drawing rights, because in this lecture we will discuss the evolution of international monetary system and the special drawing rights. The establishment of special drawing rights by International Monetary Fund marked a significant step in reforming the international monetary system and addressing global liquidity concern. So what happened after the World War II, the global economy transitioned from a gold standard to a currency-based reserve system, as we have already explained in my first part of my lecture. So that is why it predominantly relying on US dollars and British pound sterling. However, the persistent balance of payment deficit in the US and the UK created a liquidity crisis, overall, global liquidity crisis, necessitating a new international reserve asset. So that is why, to address this issue, IMF introduced special drawing rights to stabilize the monetary system and to ensure balanced growth of international reserve. Now, if you see the historical background and establishment of SDR, the concept of SDR was first proposed at the International Monetary Fund annual meeting in October 1967 in Rio de Janeiro, that is in Brazil. So detailed proposal was approved in April 1968 and special drawing account was officially established on August 6, 1969. So SDR, that is a special drawing rights, was designed to supplement the existing reserve assets of the countries such as gold and major currencies, and could be adjusted. There's a flexibility, then it could be adjusted in response to global demand, thereby ensuring international monetary stability. So that's why international drawing right is considered to be additional reserve asset along with gold and major currencies. Now we need to understand the mechanism and allocation of special drawing rights. So under the special drawing rights framework, what the IMF do, the International Monetary Fund allocates SDRs to member countries based on a quota system. So these allocations are determined collectively and are proportional to each member's shares in the IMF. That means higher the share in the IMF of a countries, higher is their SDR. So that is why SDR allow countries to obtain convertible currencies from other members. So when a country's SDR holding fall below its allocation, it must pay interest to the IMF, while excess holding earn some kind of interest from the International Monetary Fund. So this is how SDR works. Since we discussed what is the necessity of introducing SDR by International Monetary Fund, how it works, next we will discuss about the features of SDR, that is special drawing rights. The first features of special drawing rights is the additional reservation. Obviously, as I have already explained, this SDR act as a supplementary international reserve, complementing traditional reserve like gold and major currencies. If there is some kind of crisis, there is some kind of international liquidity crisis, that there is lack of gold, then what the countries can do, they can use their quota of special drawing rights. Another important features of special drawing rights is the checkbook currency. SDR exists as a bookkeeping entries. They exist, special drawing rights exist as a bookkeeping entries within the International Monetary Fund and can be used in international transaction similarly to a checkbook system. Another important features of special drawing rights is the transferability. You can transfer the special drawing rights from one member country to the others, just like exchanging of gold and major currencies. So SDR can be exchanged for convertible currencies from IMF designated member countries with strong. IMF designated member countries with strong reserve. Another important features of SDR is the backing. What backing is all about? SDR derive value from IMF regulation rather than a tangible assets. So relying on members' commitment. So that is why backing is considered to be one of the important features of SDR. Credit creation principle is also considered to be one of the important characteristics or features of SDR. What generally happens, the IMF can generate SDR without requiring additional deposits of gold and currency. That is why SDR has an inbuilt principle or characteristics of creation of credit without having additional deposits of gold and currency. Additional, they can create additional based on quota. So what basically happened, developing nations, it basically happened that developing countries, we observe that developing countries receive a larger share of special drawing rights, while developing, that is less developed countries have larger share and less developed countries receive a smaller portion. That is why it is said allocation based on quotas is considered to be another important features of SDR. How we can value the SDR? If you see the evolution of SDR, initially SDRs were valued at 0.88867 grams of fine gold or $1 US. However, with the shift of floating exchange rate in 1974, SDR valuation was linked to a basket of major currencies. So that is why since 1981, this basket has been composed of the currencies of the 5 largest exporting countries, with periodic revision in every 5 years to ensure accurate representation of global economic conditions. So this is how the valuation of SDRs is done by IMF. Now if you see the working mechanism of SDR, IMF create and allocate SDR to the member nations when additional global liquidity is required. So the first allocation was occurred between 1970 to 1972, amounting to amount of SDR of 9.3 billion, followed by subsequent allocation in 1971, 1979, 1980, and probably 1981, totaling SDR of 21.3 billion. Now this SDR, the utilization of SDR, if you see, SDR, it facilitates various financial transactions, including transaction with some kind of designation transactions, such as member countries can use SDR to obtain foreign exchange from other designated members with strong reserve. So that means a transaction of SDR can be done between these countries. Some of the countries means less SDR and some of the countries means more SDR, and they can exchange among themselves. And that transaction are basically done by some kind of agreement. So there should be some kind of mutual agreement between the countries which allow for SDR based currency exchange. Now SDR can be also general account transaction also. SDR are used for IMF operations such as repurchases and financial settlement. Sometimes it happens voluntary transaction, because since 1978 voluntary transaction has been permitted, including swapped arrangement, that is exchanging SDR for currency or another asset with a agreement to reverse the exchange later. There is a scope for forward transaction also, buying and selling SDR for further future delivery at agreed exchange rate. Those kind of provision is also there in the SDR. Why SDR is so popular? Because there are lots of inbuilt mechanism which allows the countries to use their SDR as per their wish. Even on the basis of SDR, you can also give loans, lending SDR with agreed interest rate and repayment terms. Those provision is also there. There are some kind of provisioning of financial settlement using SDR for financial obligations. There is a provision for security obligation, using SDR as collateral for taking loan. Donation also. Sometimes the developed countries, the well-off countries, they can also use SDR as a donation for grant and transfers. Now, what IMF did, IMF basically did take lots of measures to improve SDR operations. So, what are those measures? To enhance the effectiveness of SDR, the IMF has introduced measures such as linking SDR value to diversified basket of major world currencies, which I have already mentioned. Then, what IMF did, they increasing SDR interest rate to encourage their use, so that more countries use and SDR, which can benefit them, which can give some kind of profit in terms of increased interest rate. IMF also allowing official financial institution to hold SDRs. It is also using SDRs as a IMF unit of accounts. Now, if you see the SDR in India has benefited. India has benefited from SDR allocation. If you see the as receiving SDR worth of rupees 75.4 crores, which amount which you can, if you convert it in US dollars, it will around 11.5 million US dollar in 1970-71, and it increases to 120.5 crores in 1980-81. So this allocation has been, this has primarily been used for IMF repurchases and interest payment. So over time, India's SDR holding have fluctuated, recording 149 million SDR in 1970-71 to the 56 million in 1995-96. So it keeps on fluctuating. Now, merits of SDR. If you see the merits of SDR, it helps to stable reserve asset. It helps to control growth of reserve. It also inbuilt mechanism of flexible repayment and unconditional use. So these are all considered to be merits of SDR. Now, since we are talking about merits of SDR, and SDR has lots of advantages, but there are some demerits of SDR also. One such demerit is the inequitable allocation. So SDR are distributed based on IMF quotas. So obviously it favored developed countries over those with higher financial need. So that is one of the demerits of special drawing rights. It is inequitable allocation. Because allocations are made, they are not equal allocation among the countries. So limited liquidity impact is considered to be another important demerit of special drawing rights, because despite SDR allocation, liquidity challenges persist among the countries, especially for developing nations. Another important demerits of SDR is that SDR lack tangible backing. So it basically raises concern about long-term confidence. So inflationary risk is also considered as a demerit of SDR, because unrestricted SDR issuance could contribute to global inflation. So thus, in conclusion, what we can say, in this lecture we have discussed about both international monetary system and special drawing rights. So regarding international monetary system, in conclusion, what we can say, that international monetary system has undergone significant changes over time to adopt the evolving global economic condition. So despite this modification, it has modified over the years, its fundamental goal of ensuring financial stability and promoting international trade has remained unchanged. Classical gold standard was an important initial phase that introduced a fixed exchange rate system, fostering global trade and enforcing strict monetary policies. So as the IMF continues to evolve, its ability to balance stability with flexibility remain crucial in addressing modern economic challenges. Now regarding SDR, what we can conclude from our lecture is that SDR have played a crucial role in international liquidity management, providing supplementary reserve asset to stabilize the global financial system. However, imbalances in their allocation and systematic limitation reduce their effectiveness. So that is why there's a need of continued reforms. So that is why IMF also, introduced lots of reform measures. So these reform measures, including equitable allocation, increased reliance on SDR as a primary reserve asset, could enhance their role in global financial stability. Thank you.